What's up? Mike here, head trader at True Trading Group, September 17th. Strong day trading oil today. Coming into the day today, my whole game plan was going to be on oil with the volatility that's been going on with Saudi Arabia and the drone attack on their oil factory and everything. I talked about it yesterday in my video, and I talked about it a little bit yesterday about expecting a pullback actually in the price of oil after the big kind of run up because of the drone attack in Saudi Arabia. So coming into today, that was my focus, and we actually used fundamental analysis today. My trade today in drip, I traded drip multiple times today, but my big win was right in the morning, and it was a fundamental play, more so than it was a technical play. And sometimes when you are looking to trade some of these industries and sectors like gold or like oil, okay, there usually will be some type of a fundamental reason for the movement of those commodities, okay? And I was looking for the price of oil to pull back. So let's recap what happened, okay? And then we're gonna get into my trades. There was a drone attack in a Saudi Arabia oil factory. It took out about, what is about 5% of the global production consumption of oil. Okay, when it first happened, people were saying it's going to take them weeks to get that production back online. There was concerns that the U.S. was going to get involved to protect their ally and retaliate because the drone was supposedly fired from an Iran-backed militia. And obviously, you guys know the tensions that are going on between the U.S. and Iran. They're just causing havoc in that whole region with oil. They're, seizing oil ships. Now they're, attacking Saudi Arabian oil factories. And there was concern that if the U.S. or Saudi Arabia retaliate with a military response, it could really spark havoc in the region and create a longer-term bullish trend for the price of oil. So that was why you had such a big spike in the price of oil yesterday. That spike in oil caused drip to have a huge gap down and continued sell-off down over 30% yesterday. Drip, guys, is the 3 times bear S&P oil and gas explorers. Okay, so similar to like how JNUG is based off of junior miners for gold, drip is based off of oil and gas companies. Okay. So you had this big gap down in drip and this acceleration lower. This drip has been a phenomenal trade. It's got excellent range on it. I spoke about it yesterday in my video. But now coming into today, if I'm expecting a pullback in oil, that means drip has a long way to make up. I mean, you look at this big gap down yesterday. I was looking to get long and play a bounce in drip today because I'm expecting a pullback in oil. But why? This is where the fundamental analysis comes in. Why am I looking for a bounce in oil? Because 2 things. The reason why oil spiked is because of fear of escalation, fear that this could turn into a industry trend change. Okay, oil has pulled all the way down. Oil, was trading around $50 a barrel. Okay, 52, 53, 50. And if we were going to, it would take a real industry trend, a real industry catalyst to push oil to $60, $70, $80 a barrel. Trump doesn't want that because that would hurt the consumer. You hurt the consumer, you hurt the economy. The U.S. economy right now is being run off of and is strong because of a strong consumer. If consumers are starting to pay $4.50 a gallon at the pump, that's going to hurt the consumer's purchasing power. That will hurt the economy. That'll hurt the data. That'll hurt the stock market. That'll hurt his campaign. So coming into today, I'm saying, what are we looking for after yesterday? So last night and into this morning, I'm looking for news headlines. I'm looking for insight and indications. Is Trump active on Twitter? Is he really going after Iran? Is there going to be a retaliation? Is there going to be a response? What's Pompeo saying? What's Saudi Arabia saying? And I'm looking for clues that either it's going to take a real long time for this oil production to get back online in Saudi Arabia, or the U.S. is going to respond with a military action. If neither one of those two things happen, this will turn into an isolated event, not an industry trend changing catalyst. Because this attack on the oil factory, yes, it disrupts oil spikes in price, but if there's no ongoing military action, there's no ongoing conflict, and Saudi Arabia is able to get that oil production back online quickly, there's no reason for oil to keep going higher. It'll come back down and settle back below $60 a barrel. That's what I was looking for. So last night and into this morning, the U.S. was quiet. Trump really was quiet about it. There wasn't a lot of threats. Saudi Arabia really never does military action, because Saudi Arabia getting involved in a military response would just disrupt the oil industry in general. And they don't like volatility in oil prices. They like stagnation and like steady oil prices. They don't like ups and downs. Obviously, $100 barrel oil is good for Saudi Arabia, but they don't like the ups and downs. So that's why you really never see Saudi Arabia get involved in military conflict. But the U.S. is their ally, and there was a chance that the U.S. could respond. When we didn't see any of that, now I start to look for signals out of Saudi Arabia. The oil minister said that we expect to get production back online within a week. That's way faster than what people initially said when the attack first happened. When the attack first happened, they were talking, oh my God, it's going to be weeks before they get that back online. Could be more than a month. Oil spiked. Now you have the minister saying it could be back online within a week. Now I'm saying to myself, oil is going to pull back in based on those two things. That is why this trade was based on fundamental analysis rather than technical. Right off the bell, okay, we had a little gap up in drip. Right off the bell, we pushed right through this little pivot resistance point that we had yesterday, and we had to put in a real strong green candle right off the bell. On this first red candle pullback, I went ahead, guys, and I jumped in long drip right there. It takes in my trade announcements on the day. Here we are, just 3 minutes into the day, long drip at 54.82. Okay, and just 5 minutes after my entry, I'm peeling profits off the table at 57. So we pop up right out of the gate. Boom, there's 25% of my position off the table at 57. We extend higher. There's 50% of my position off the table at 58. And then we extend even further. And I almost damn near top ticked this move. And I got flat the last piece of my position right there at 60.25. Back to my trade announcements. Here you are, guys. 57, 58, and 60.25. I believe the high of this move was 60.55. So I missed the top tick of that by 30 cents. And this was a really great trade. You know, a really great way to start the day from 54 and change all the way up to 60. I mean, that's why I love this drip. I mean, when oil is in play, this thing moves, and this thing moves a lot. I mean, you're talking this thing can move, $10 in a day. Okay, that's a type of volatility that you have on this ETF when oil is in play. And that's how I started the day. And it's because of that fundamental analysis. Okay, we got that pullback in oil right out of the gate. We broke below a key $60 support level. We broke back below it. Once we got back below 60, that's when we had the acceleration in drip higher, and that's why I started peeling profits off the table. Okay, I went after drip 2 more times. Okay, we had now this gets technical now. Okay, now that we talked about the fundamental analysis, now we're going to talk about technicals. Okay, here we have the 23.6 Fibonacci level, lines up with the trade line. I'm not sure why my Fibonacci looks so faint. Let's see. There, that's probably better. You guys can probably see that better now. Okay, so here's the 23.6 Fibonacci level. It lined up there with the trade line. I liked how we had real strong increasing volume on the way up, decreasing volume during this little pullback, and I went back in and I got back in long right there. I got back in drip at 59.52. Okay. We got a quick little move up to the high of the day. I took some profit off, 25% of position off in front of the high of the day, just to be smart, prudent. And then as we rolled it back over, I exited this position right here as we broke down below VWAP. Take you back to my trade announcement so you guys can see sold out, remaining drip at 58.38. So a little bit of a loss on that trade. I was able to take some profits on 25% of the position, but a loss on the bulk of the position. So gave back a little bit of those profits, but still sitting real pretty from that first trade. And then I went after this one more time and added some profits later in the day. Okay, later in the day, let me go back and delete this, clean the chart up a little bit for you. Later in the day, there was a press conference by Saudi Aramco, which is the state-owned oil company. They're actually doing an IPO very soon. Okay, they said, and then the oil minister said that we are actually back to full oil production. That's where this big spike came from in drip. High volume. You saw a big pullback in crude, the price of oil on that news. So I waited for this. I missed this move on the news. And then you had this pullback. And on this pullback right there is where I went ahead and I got back long drip. I'll take you to my trade announcements. Long drip at 59.41. And as we extended up here, I took 25% of the position off the table right there in front of the resistance at the high of the day. You can see I took some off at 60.57. So a little more than $1 a share. And then right before the close, I got flat at 60.38. I considered holding on to the rest of this position overnight, but we've got the API report that's coming out, and I just didn't want to be susceptible to, risk with, one tweet from Trump about Iran could send the price of oil spiking. And tomorrow's the Fed decision. We're gonna find out if the Fed is gonna cut rates or if we're gonna stay unchanged. I think we're going to get some volatility in the afternoon session after the Fed makes their announcement at 2 o'clock. So I want to be fresh for that trade. I'm going to be looking at SPY call options, SPY put options based on if we get a 25 basis point cut or if we stay unchanged. Either way, I think we're going to get some good volatility, some good action in the afternoon. So I don't want to hold on to this position overnight. Trump sends out a tweet, oil spikes, and I'm starting the day in a hole. So I just decided that I'm going to get flat the position, lock in my profits. It's a real strong P&L day, and I'll go after this tomorrow if the trade sets up. What I'm looking for now, guys, is this like 61.50 area. You can see we have like a reverse head and shoulders pattern here. If we get above 61.50, we have a chance to really make back this gap down, and I'd be looking for a move to test this previous support at 67.50. So you see this little double bottom here on drip on the 10th and 11th. If we get above 61.50, I think you could see a move back up to that area in drip, but that's going to require a big pullback in the price of oil. We're going to have to get back down to like $55, $56 a barrel, which is very possible if there's no escalation. Okay, so you got to wait and see what happens, but that's why I decided not to carry this position overnight, and we'll see what happens here coming to the day tomorrow. All right, so my focus will be still on this drip if we can gap above that level, and then I'll be looking to trade the market off of the Fed decision tomorrow. This is a really great trade. A lot of people in chat caught it. It was my focus coming into the day, and this is based off of a fundamental analysis rather than technical. Little change of pace for us today. I'll see you guys in chat tomorrow. Take care.